Hello learners, welcome again to another session of ratio analysis. Friends, in our previous class, our lesson, we talked about one of the categories of ratios, which is profitability ratios. And we talked about profitability ratios like net profit margin, gross profit margin, return on equity, return on capital employed, and return on total assets. I think now you are familiar with how to calculate or determine the profitability ratios. And today I would like us to move to the next category of ratios, which is liquidity ratios. Liquidity ratios. Learners, when you hear about liquidity, what comes into your mind is liquid cash. Liquidity ratios determine the ability of the firm to meet its short-term obligations, the ability of the firm or the entity or the company to meet its short-term obligations. Is the firm able to pay its short-term liabilities? Right? So that is what we will discuss today. So liquidity ratios, they are of majorly three. One, you can talk of current ratio, which you may also call it working capital ratio. So current ratio is also known as working capital ratio. We will also talk about quick ratio. We'll also talk about quick ratio, which is also known as acid test ratio. Acid test ratio. We will also talk about how to calculate cash ratio. So these three examples of liquidity ratios will tell you, or you will be able to know, the ability of the firm to meet its short-term obligations. So that is it. So in our previous class, we were using this example, which was you are provided with the following extract of the statement of profit or loss and the statement of financial position for Darubini Limited for the years ended 30th June 2020, 2021, and 2022. So we were comparing the ratios for these 3 years, 2020, 2021, and 2022, to see or to be able to analyze these financial statements, which is the profit or loss statement and the statement of financial position, using ratios, and be able to make informed decision for the company or to advise accordingly. So let us start calculating these ratios. So our first ratio here is current ratio. So we have current ratio. So I said current ratio is also known as working capital ratio. Okay, current ratio, the formula for current ratio is equal to current assets over current liabilities, current assets over current liabilities over current liabilities. So in our example here, in our question here, we will be able to calculate the current ratio. So we will say current ratio is equal to current assets over current liabilities. So in our question here, we can say current ratio is equal to our current asset here, our current asset, total current assets here. We have 19,500 divided by the current liabilities, total current liabilities, which is here. It's comprised of accounts payable and bank overdraft. So you get this. So these liquidity ratios are not in percentage, so you will leave it like that. You will just decrease the decimal points to make it 2 decimal points. Okay. So for the next year, which is 2021, our current ratio is equal to our total current assets, which is 3,500, divided by current liabilities. So that's it. That is it. That's how easy it is to calculate liquidity ratios. That's how easy it is to calculate liquidity ratios. So then we'll be able to calculate the current ratio for the subsequent year, which is 2022. So friends, now let us move to the next ratio under liquidity ratios, which is you have the quick ratio. So a quick ratio is also known as acid test ratio, and the formula for quick ratio is equal to current assets minus inventory, divided by current liabilities, current assets minus inventory, you divide by current liabilities, So that's the formula: current assets minus inventory divided by current liabilities. So in our question here, our current assets, total current assets, which is here, you less the inventory, which is here, then you divide by the total current liabilities, and you have your answer there. Divided by the total current liabilities. Then for the subsequent year, the same formula applies to it, whereby we will say quick ratio is given by current assets is given by the total current assets minus inventory divided by the current liabilities divided by the current liabilities. Then you can be able to get the quick ratio for the year 2022. Okay, friends, there's a note to remember here whereby we used the closing inventory here, 1500 for the year 2020. It is the closing inventory for the year 2020. So sometimes the examiner might be specific and asks you about the quick ratio for the year 2021. Then if you are asked like that and you have been given the opening balance of the year 2021, which is the inventory for the year 2020, then you calculate inventory by getting the average, the opening inventory plus the closing inventory divide by 2. You will get the average. But in this case, we have been asked to calculate the quick acid test ratio for these 3 years, and we have not been given the opening inventory for the year 2020. So in that case, we will use the closing inventory throughout. We will use the inventory for each period. So we will not calculate the average inventory because we have not been given the opening, or the closing inventory for the year 2019. I think that's a very important point to note. Okay, so we can just put an MB here and say, you can be able to put a point or an MB here, not to remember, and say that we can be able to say that use average inventory if you have been given the opening inventory. So otherwise, if you have not been given the opening inventory, then you will just use the closing inventory there. So like in the case of for the year 2020, we don't have the inventory for the year 2019. So we will not be able to use the average inventory. So we'll just take 15,000 here as our inventory. And once you apply that in the first year, then you need to use that throughout the other periods. Like 2021, you will still use the closing inventory as the average inventory. You will not need to calculate the average inventory because the concept will apply it throughout the rest of the period. I hope that's an important point to note. Okay, let us move to our next ratio, which is cash ratio. So cash ratio is given by the formula for cash ratio is equal to cash plus cash equivalents. Cash plus cash equivalents, you divide by the current liabilities. You divide by the current liabilities. So we know cash. We know cash, but how will we get the cash equivalents? Cash equivalents are like investment incomes. Okay, all those short-term investments that fall under current assets are classified as cash equivalents. So in our question here, so for us to get the cash equivalence, cash equivalence include what? They include investment income. They include investment income. They include investment incomes. Okay. They also include bank overdraft. Cash equivalents include investment income, bank overdraft, and any other short-term investments that fall under current assets. That's basically what cash and cash equivalents are. So like in our question here, our cash and cash equivalents are what? Cash and cash equivalents, we have the cash and cash equivalents itself. The cash and cash equivalents here are the bank overdraft. You have one here, and sometimes here under current assets you might find investment income. So that item is also cash and cash equivalent. Cash equivalents are basically these are items that can be easily converted to cash. They can be easily converted to cash. Like for instance, you cannot say inventory is a cash equivalent. No, it will take time to sell those inventories, sell those stocks to get cash. So it cannot be easily converted to cash. So that is what we mean by cash and cash equivalents. Anything that can be easily converted to cash. So in our case here, so we have cash. First we need to get the cash, and then we need to get the cash. We need to get the cash, and then we need also to determine the cash equivalents. So in our question here, for the year 2020, our cash and cash equivalents are just zero. Then cash and cash equivalents are just zero. But we have, that's under current assets. But under liabilities, we have seen the bank overdraft. And here we'll just say we will get the net cash and cash equivalent. Net cash and cash equivalent. We'll be able to get it here. So the bank overdraft for this year is what? Remember, bank overdraft is a liability. So when we want to get the net cash and cash equivalent, then we need to subtract. So that is for the year 2020. So for the year 2021, our cash and cash equivalents are just zero. Then the other one, cash is zero, cash equivalents also zero. Then bank overdraft is how much? Bank overdraft for this year is this, but it's a liability, so we need to less. Then we'll also get the cash and cash equivalent for the year 2022, which is this. Okay, it's just, it's just this one. cash and cash equivalent is this one. Then for bank overdraft, our bank overdraft for the year 2022 is 0. It is 0. So we can get the net cash and cash equivalent by getting the sum. By getting the sum of this. By getting the sum of all this. Sum of all this. So these are our cash and cash equivalent. These are our cash and cash equivalents. You just take any item that falls under current assets that can be easily converted to cash, like cash and cash equivalents, short-term income, investment incomes, all that. Then under current liabilities, you will take figures like the bank overdraft. And bank overdraft is a liability, so you will less it from the current, from the cash and cash equivalents that fall under current assets. So in our question here, we say that cash ratio is given by cash plus cash equivalents divided by current liabilities. So we already have the cash and cash equivalents. What we are lacking here is the current liability. So we can be able to insert the formula here and say that cash and cash equivalent for the year 2020 is given by this, which is the net cash and cash equivalent. You divide by what? By the current liabilities. The current liabilities for the year 2020 is that one. So we'll be able to get that. We'll be able to get that. Then same applies to this here also. Our net cash and cash equivalent is, which is negative 93.21, which is 93.21. Here in this year 2020, we said that cash ratio is given by our cash and cash equivalent, which is the net. We divide by what? We divide by the current liabilities. Okay, I hope I'm clear. Then in the year 2021, our cash ratio is given by the net cash and cash equivalent divided by the total current liabilities for the year 2021. That is it. Then we can be able to calculate for the subsequent year, which is 2022. So let me decrease the decimal points. So that's it. These are the cash ratios. So these are our cash ratios. So that's the formula for calculating the cash ratio. You will take the cash plus the cash equivalents, then you divide by the current liabilities, and there you are. There you are. So friends, that's the end of our discussion today of discussing the liquidity ratios. I hope you enjoyed this lesson. Kindly consider subscribing and liking this video so that you will not miss any videos or that we may upload. So thank you for your time, and may God bless you abundantly. Thank you.